I've just achieved my goal of hitting over $100,000 in my ETF portfolio. ETF investing is definitely one of the best, easiest, and most lucrative strategies to grow your money as fast and reliably as possible in the stock market without letting your money lose value to inflation in a bank account or without being as risky as perhaps crypto or even individual stocks. If you guys are new here, hi, my name is Marcos Mia. I'm 23 years old and I've been investing my money in the stock market for the past few years, where I did legit everything I possibly could to invest the most amount of money back into my ETF portfolio with the help of capital appreciation from the stock market's high returns over the past few years, and even reinvesting all my dividend paychecks back into buying more shares of my favorite ETFs. And in this video, I'm going to be revealing my entire $100,000 ETF portfolio for long-term investing, since I plan on continuing to buy and hold all my favorite ETFs for the next 35 plus years. And I won't be selling a single share of my ETF portfolio if there is a recession, volatility, bad news in the stock market, because I am a long-term investor. I'll even go over my long-term plans with my current portfolio and my future strategies for retirement. So without further ado, let's get started. For some quick background knowledge, I have a total of 2 investing apps. Now, one is with my current employer with my 401k investing account, and that has a total balance of over $10,083.83. And my other app is my Vanguard Brokerage with a total balance of $92,840.91. So combining both of these apps, I have a total balance of $102,924.74 in ETFs. Taking a look at my Vanguard app, I have a total of 2 investing accounts with Vanguard. I have a taxable brokerage account that has a balance of $82,036.96, and my Roth IRA, which is a retirement account, has a value of $10,803.95. With all that out of the way, the fun part is going to be all the ETFs that I currently own. So in my taxable brokerage account, the strategy is a very simple 3 ETF portfolio. I currently have a video out going over what a 3 ETF portfolio is, so go ahead and check that out. But basically, the core of this portfolio is going to be in a broad market ETF like S&P 500 ETF VOO by Vanguard, which makes up around 68% of this portfolio. Now, I absolutely love the S&P 500, and it will always be my highest holding forever in my investing journey, because S&P 500 and chill is the way, in my opinion. I have a growth ETF for more of a tech and high growth play, invested in QQQM by Invesco, making up 27% of this account, and a lower risk, more value oriented dividend ETF that still has a very good yield, that being SCHD by Charles Schwab, or 5% of this portfolio's allocation. For all you guys wondering the dividend yield of this portfolio, I went to M1 Finance and plugged in my portfolio's percentages to the ETFs that I own, and this portfolio currently yields over 1.2% for its dividend yield and has a very low expense ratio of just 0.06% combined for all 3 ETFs. Moving on to my Roth IRA, this is also a very simple 3 ETF portfolio. But this portfolio is going to be on the more aggressive side, in my opinion, than in my taxable brokerage account, because I am more focused on growth in this 3 ETF portfolio, since I can only contribute up to $7,000 per year to max out my Roth IRA. The highest holding in my Roth IRA is a high quality growth ETF, that being SCHG by Charles Schwab, making up 57% of the portfolio, followed by the S&P 500 VOO by Vanguard, making up 25% of the portfolio. And a dividend growth ETF, because this dividend ETF is going to be a touch more tech heavy than SCHD and a touch more on the aggressive side than investing in only SCHD. And it's also one of my best strategies to invest for dividends is combining SCHD and DGRO for the long run. So that's going to be DGRO by iShares, making up 18% of this portfolio. The dividend yield of my Roth IRA is going to be lower than my taxable brokerage account, just under 1%, because I have a higher allocation to growth ETFs, which have inherently a lower dividend yield than both broad market and even dividend ETFs. The expense ratio is also going to be very low at just 0.04% combined for all three holdings. Moving on to my 401k investing account, my 401k only had two good funds to invest in. It was either going to be VTI by Vanguard, which is a total stock market ETF, or very low risk bonds. So I chose VTI by Vanguard, so a one ETF portfolio broad market ETF strategy to make my investing life as simple and as easy as possible. With a dividend yield of 1.3% and a low expense ratio of just 0.03%. Now, I know you guys are going to be wondering about any other ETFs I think are great for the long run if you are a long-term investor. Now, on your screen, you're going to be seeing some honorable mention broad market ETFs to invest in for the long run for that ultimate diversification, some dividend ETFs that I like to invest in for dividend income and some capital appreciation, and even growth ETFs for that high risk, high reward type play. But please do your own research and your own due diligence before you even consider buying or investing in any ETFs, regardless of how good or high quality that they are. On a real note, hitting over $100,000 in my ETF portfolio is one of the most important and crucial milestones. I'm super thankful and honestly really grateful to be hitting this milestone at such a young age, just 23 years old. And it's all thanks to you guys for motivating me, every commenter, every liker, and every single subscriber. I absolutely love you guys from the bottom of my heart. My goal is to hopefully inspire every single viewer to invest their money in the stock market in high quality investments like ETFs, index funds, mutual funds, etc. I try to be as transparent and honest as possible as a YouTuber because honesty is the best policy. In my book, it's good to be transparent and honest, especially with finances. Honestly, I'm not a huge fan of day trading or just options trading, just bad investments in general. I'm a really big believer of investing in the long run in high quality investments. Now, my long-term investing strategy is going to be to invest for the next 35 years, at least for retirement. Now, for all you guys wondering what that strategy is, it's going to be a very, very simple strategy, and I'm going to be giving you a full and complete breakdown. Number one, continue to buy and hold my ETFs and never sell any shares of my investments before retirement. Number two, continue to dollar cost average or DCA on a weekly basis in my ETF portfolios. Because I really don't care about the short-term movements of the stock market. I am a long-term investor and I could care less if the market goes up and down today because in the long run, it's just gonna go up and up and up. Number three, reinvesting my dividends. I honestly don't plan on living off of dividends at all in my 20s, 30s or 40s, but probably in my 50s and definitely in my 60s because reinvesting your dividends is going to be one of the most powerful ways to increase your returns over time in the long run. Number four, reallocate my ETFs in the future to more dividend ETFs and low risk assets like SCHG or VMFXX. As I near retirement and am actually in retirement, I'm going to be taking full advantage of both the dividend funds and lower risk investments such as short-term treasuries to de-risk my portfolio's allocation. Because in my opinion, broad market ETFs are like a 4 or 4.5 out of 5 on my risk scale. Growth ETFs are like a 5 out of 5 on my risk scale. Dividend funds are like a 3 to 3.5 out of 5 on my risk scale. And SCHG and VMFXX are a money market fund and a treasury bond ETF even on Vanguard's website, these are going to be a 1 out of 5 on Vanguard's risk scale, which I totally agree with. Number 5 is to be open-minded to other ETFs. I 100% have my eyes on other ETFs for diversification purposes, like international ETFs and even small cap ETFs, because my portfolio is not the most diversified, in my opinion, if we talk about true diversification, which is to have large cap, mid cap, small cap, and even international funds, and even bonds, but I am very young and have a long time horizon. Because my portfolio is more of a US large cap tech focused ETF portfolio, and honestly, I do have my eyes on other funds in the case I need to. Lastly, everyone's portfolio strategy is going to be completely different based on their time horizon, investing strategies or preferences, their age, their risk tolerance, and there's not going to be a perfect investment portfolio for everyone. Now, are there portfolios better than others? 100% yes, like SPY versus SPLG or VOO. Of course, the answers are going to be VOO. ARK versus VGT. Of course, the answers are going to be VGT, I hope. Now, a big shout out to my YouTube members, a part of my Gold VIP membership group, where they get complete access to my portfolio every single week, where they can see the balance change, my stock market recaps of the week, and even my buys, where I will literally alert you every single time I buy all the ETFs I talked about in this video. So much love and so much perks are in that membership group, so go ahead and check that out. If you guys like this video, please give it a like, because this Q puppy did. Right here is going to be a video on how to invest in the stock market for complete beginners in a free course. And right here is going to be more information on that 3 ETF portfolio strategy. I love you guys so much. Continue to crush in the stock market and take it easy. Peace.